Hello everyone, welcome to EduTap and welcome to the Finance 360-degree sessions in which we cover the important and relevant finance current affairs and the RBI notifications, the RBI press releases that are important from the exam perspective. And today I have brought for you the two very important RBI press releases that are very important from the exam perspective. Okay, so today we are going to cover the BSR, that is we are going to cover the annual data for the credit and the deposits. Okay, so we are going to discuss that what is the annual data that has been released by the Reserve Bank of India for the credit by the scheduled commercial banks March 2024 and the data for the deposits with scheduled commercial banks March 2024. So the annual BSR has been released, the statistical returns has been released by the Reserve Bank of India, and today we are going to discuss about the data points for the credit and the deposit, as well as we will discuss that what is this BSR also. Okay, so good morning everyone, so good to see all of you here. So let's start with the session without any delay, but before that do subscribe to the YouTube channel of EduTap and join our Telegram channel for the PDF of the session. So you will get the PDF of the session in the Telegram channel, and the link for the Telegram channel is given in the description box below. So in the previous year in the RBI Grade B examination there was a direct question from the BSR. So BSR in itself is very important. Okay, but first let's discuss that what is the data for the deposits and what is the annual data for the credit that has been released by the Reserve Bank of India. So let's start with the deposits. So bank deposits has increased year on year from 2020 to 23 financial year to 23-24 financial year. There is the increase in the bank deposits that has been seen. So the increase is of 13% as compared to the 10.2% of the growth that has been seen in the previous financial year. So in the previous financial year, in the 2022-23 financial year, in the financial year 23, that is the financial year 2022-23, in this financial year there was the growth in the bank deposits by 10.2%, while in the financial year 24, that is 2023-24, in this financial year, the growth of the bank deposits is by 13%. Okay, if we see the net of merger, what is the meaning of net of merger? First of all, that some of the non-banks, that is the NBFCs and such, they have got merged with the banks. So they also had some deposits. So when we add the deposits of these non-banks that have got merged in this financial year with the banks, then the total growth in the deposits is by 13.5%. So you have to remember that if we are seeing the net of merger, then the growth in the bank deposits is by 13.5%. Okay, the deposits of all population groups has increased. Even in the rural area, the deposits have increased. Even in the semi-urban areas, even in the urban and metropolitan areas, the deposits have increased, and you can use this data point in your descriptive answer writing also to show the financial inclusion in the areas of this rural and the semi-urban areas. I will tell you that which data points you have to remember from the exam perspective and which data points you can leave. Okay, you do not have to remember. So this is the data point that you have to remember, that the deposits growth has been increasing. That means more people are depositing, or there is the value that is increasing of the deposits. Now the household sector. What is the household sector first of all? So in the household sector we have the individuals, we have the Hindu undivided family, as well as we have the proprietary concerns. Proprietary concerns, there is the sole proprietor, sole owner of the business, or there is the 1 or 2 or 3 people that are doing the business together. So those are the proprietary businesses, or those are the proprietary concerns. So they also come in the household sector. Even the partnership firms, they also come in the household sector. Okay, so when we talk about the household sector in the BSR, in the basic statistical return, the deposit and the credit return, so the household sector includes the individuals, proprietary concerns, Hindu undivided family, as well as the partnership firms. Okay, so household sector remained the largest group of the depositors with 61.1% share. So out of the total growth that has been seen in the deposits and total depositors, so out of the total depositors, 61.1% is the household sector. Okay, female depositors. Now this data point is important, that if we talk about the female inclusion in the financial system, so here the data point that you can use is for the female depositors within the sector, within the household sector. The female depositors held 20.7% of the total deposits of the scheduled commercial banks in March 2024. So this is again showing you that the financial inclusion is happening of the females also, of the rural and the semi-urban areas also. So the household sector, you just have to remember that more than 50% of the depositors are from the household sector. But when it comes to the female data points, so that you can remember and that you can use in any of the answer writing. So that is female depositors within this sector, that is household sector, held 20.7% of the total deposits. So out of the 100% of the deposits that the household sector is keeping, 20% is being kept by the female depositors. Okay. Current savings and term deposits accounted for. So out of 100, so let's say this is the 100 lakh crore of the deposits that is happening, total deposits till March 2024. Till March 2024, the total deposits with the banking system is 100 lakh crore. Out of this, the major chunk of the deposits is the term deposits. Then the major chunk, the second major chunk is, that means this much, this whole is, let's say, of the saving deposits that is happening. So this is the saving deposit, and only a very small portion is the current deposits. So this is the idea that the major chunk out of the total deposits in March 2024 of the total deposits, the major chunk is of term deposits. Then the second major chunk is of savings deposit, and then the third major chunk is of current deposits. So you do not have to remember the data points, or you can remember that 59% is of term deposits, 30 or 31% we can say is of savings, and nearly 10% is of current account. Okay, so that is the total deposits are divided into these three categories, and the highest of the total deposits is in term deposits. Okay, now the next point is that more attractive return that the interest rate, the repo rate is at a high percentage rate. So interest rate for the loans is also at high percent, as well as the interest rate for the savings right now is also at a very high percentage. Usually for the savings you get 2%, 1.5%, 3%. For the term deposit you get 4%, 5%. But right now the term deposits are attracting a higher interest rate. They are attracting more depositors because of the higher interest rate. Like 6%, 7% of the returns also you are getting from your term deposits. So more attractive returns resulted in very high share of incremental deposits accruing under the term deposit during this financial year. So during the financial year of 2023-24, the incremental deposits that have happened. So let's say that 50 lakh crore of the increase has happened in the deposits, or 10 lakh crore of the increase that has happened in the deposits. So from that increase that has happened in the deposits in this time period, 78.5% was going for the term deposits because of the high interest rate that is being given in the term deposits. So more attractive returns resulted in very high share, nearly 78.5% of the incremental deposits that are coming to the banking sector. So the incremental deposits, the deposits that are coming to the banking sector in this time period, from that a very high share is going to the term deposits under this time period. Term deposits bearing 6% and above interest rate accounted for 86.6% of the total term deposits. So in the term deposits also, so incremental deposits, let's say, is of 10 lakh crore. From this 10 lakh crore, nearly 78.5%. 78.5% of the incremental deposits are the term deposits. From this total of the term deposit, more of the, like if this total of the term deposit is 100%, so from this 86.6% was going for the term deposits that have the interest rate of 6% and above. So you can understand that this is the idea. You do not have to remember the percentages, but remember that from the incremental deposits, the highest is going for the term deposits, and if the term deposit has the 6% or higher interest rate, then the much of the term deposits are going to that particular FD, that particular RD. Okay. So this is the idea. And if you see the previous data points of the 2 years, so the data was less, the term deposits were less as compared to the recent financial year. Okay, now coming to the during 2023-24, 79.1% of the rise that has been seen in the term deposits were mobilized in the maturity bucket of 1 to 3 years. That means for 1 to 3 years there is the deposits that are happening. So term deposits, the highest of the term deposits are for 1 to 3 years. Okay, so the term deposits data is not very important. The important thing is to remember that the incremental deposits, in the incremental deposits, which kind of deposit has the highest share? So the term deposits, it's not the savings deposits, it's the term deposits that has the highest share. Okay, so now coming to the credit data point, is there any confusion in the data point of the deposits? Any confusion in the data point of the deposits? What you have to remember, I have told you that the most important point to remember is the total percentage growth that has happened in the bank deposit. The female depositors, the data that you can use in your answer writing, as well as this data point can come directly in the objective section also. In this you have to remember the broad head that the term deposits are having the highest of the total, the highest chunk of the total deposits is the term deposits. Okay, in the incremental data, just remember that incremental data is highest from the term deposits. Okay, and these were given as the highlights by the Reserve Bank of India itself, so you can understand how important they are. All clear? Okay, so let's move ahead with the credit understanding. So let's see the annual data points for the credit that has been given by the Reserve Bank of India. So bank credit growth year on year increased by 15.3%. If we see the net of merger, that is there is the merger that has happened of the non-banks with the banks. Okay, so if we see the merger also, then the bank credit growth has been 19.1% if we see the mergers also. Okay, including the merger impact, so the bank credit has grown by 19.1% during the 2023-24 as compared to 15.8% rise in the previous financial year. So if you see for the bank credit, 15.8% was the growth in the bank credit during the 2022-23 financial year, while in this financial year, the recent financial year of 2023-24, that is the financial year of 24, the bank credit has grown by 15.3% if we are not taking into account the mergers. Then the bank credit growth, there is growth that is happening, but the growth rate is lesser than the previous year. So that is because of what can be the reason? Anyone can tell me that what can be the reason? I have told you one reason. But what can be the reason that from the previous year there is the decline that has happened in the growth? So growth is happening, that is correct. But there is some percentage point lesser growth that is happening. Why is it so? So that is because of the increasing interest rate. So if the interest rates are increasing, so that is good for the depositors. The depositors are depositing higher amount from 10.2% to nearly 13% of the deposits have increased, right? From 10% of the growth to nearly 13% of the growth, 13.0% of the growth. But here interest rate are increasing, so that is bad for the people that are taking the credit. Okay, yes, higher interest rate, very good. So because of the higher interest rate, there is the growth that is of lesser percentage point. Now why there is the growth when interest rate is such a bad thing? So why this growth is actually like then the bank credit should not be taken if the interest rate is rising. But you have to remember that there is very positive, there is optimism in our country that our country is going to grow. So we have to invest more at this time so that we can take the benefit of the growth in the country. So that is one major point, that due to the optimism in the country, there is the credit that is being taken. Even the households, they are also very optimistic. So consumption demand is also healthy right now. It is not very high, but it is healthy right now. So they are also taking the credit because they know that the country is going to grow in the coming period. Okay, so there is the optimism. If you see the growth data point also, so that also give the boost to the people that our country is growing. So we can, like, we are in a good position. The recession, the depression is not going to come in our country. So that is the optimism that comes here. Okay, due to which the growth is happening in the bank credit, but the growth is lesser. If we compare the growth, that is a little lower than the growth is a little lower than the previous year. Now the bank branches in the rural, semi-urban and in the urban areas recorded similar or higher credit growth. So nearly similar of the credit growth has been seen in these areas. but the major setback is from the metropolitan branches because the growth is moderating. The growth that was seen in the previous years, that is moderating now, that is coming down. The growth is happening, but that is moderating. So in the metropolitan areas, the problem is coming from here, that some growth moderation is being seen here. All population groups and bank groups, however, maintain double-digit loan growth. So loan growth is happening in the rural areas, in the semi-urban, urban areas, but in the metropolitan areas also the growth is happening, but that is moderating. But one good thing is what? That in the rural areas and in the semi-urban areas, the growth of the bank credit is happening. Individuals in household sector. So in the household sector, we have understood that what are the people that are involved in the household sector. So that are the propriety concerns, sole proprietors and the group of proprietors, as well as the partnership firms, Hindu undivided family and the individuals. Out of this, the individuals in the household sector accounted for 47.4% of the total bank credit in March 2024. So the highest, you can see that the individuals solely, they are having 47.4% of the bank credit. So the consumption demand is very good right now in our country. It is not about investment, it is about the consumption that the individuals are doing. They are also investing maybe in the assets for housing purposes, for the car purposes and such, but for the production purposes, it is not taking into account that. Okay, so the individuals are doing the consumption for their consumption purposes, for their investment purposes, they are taking loans, and out of the total loan, nearly 47% is going to the households, okay, to the individuals. Other household groups are having nearly 10.4% of the total share in the total credit, okay. So this data point you do not have to remember, but remember that out of the household sector, the highest percentage is going to the individuals. Here only the important data point was this, okay. Now coming to the next slide. So the share of female borrowers in the banking system has been rising gradually. So this is important, okay. You can write that as per the annual basic statistical report 1 of the return 1 of the RBI, there is the data point that has been released that the share of female borrowers in the banking system is increasing, is gradually rising. So that shows that more financial inclusion of the females is happening in the country, okay. They accounted for 33.6% of the loan accounts, okay, and 23.4% of the amount of bank loans to the individuals in March 2024. So out of the household sector, the highest loan category is with the individuals, and out of individuals, the females are having nearly 23.4% of the credit and such, okay, bank loan. So now during 2023-24, all major activities recorded double-digit growth in the bank credit. Let it be for the agricultural purposes, let it be for the investment purposes and such. The share of personal loans in the total bank credit, which has been consistently rising, stood at 30.4% in March 2024. Whereas the corresponding share of industry declined to 23.2%. So here, because the industries, they are facing the higher interest, even for the personal loans, there are the highest interest, but out of the total bank credit, which has been consistently rising, the personal loans accounted for 30.4%. While for the industries, the share of industries has declined to 23.2%. That is also because of the increase in the personal loans, that for the industries there are lesser loans that are going. Now the next point is that the private sector banks recorded over 15%. So here also you just have to remember that personal loans are going higher, but the data points are not important here. Now the data points that is important is this, that this data point you have to remember, that the private sector banks recorded over 15% of the growth for the third consecutive year. And here the important thing is to remember that the private sector banks share is increasing. So in the total credit by the scheduled commercial bank, the share of the private sector is increasing, and that has increased to 40.6% in the March 2024 from 33.4% 5 years ago and 19.4% 10 years ago. So consistently there is the rise in the share of the credit from the private sector bank, okay. The corresponding share of the public sector bank. So if the private sector banks are having more share, that means the share of public sector banks is decreasing. So corresponding share of the public sector banks has declined to 51.8%. So if the private sector bank is having this much of the share, so the share of the public sector bank has declined from 73.2% 10 years ago to 51.8% in the recent time. Rapid growth has been seen in lending by the small finance banks, so that is good. The small finance bank are the differentiated banks that provide the small finances to the unserved and the underserved areas. So even in those areas, the finance is increasing, the lending is increasing because of the share that we can see that the share of the small finance bank is higher. So rapid growth has been seen in the lending by the small finance bank, resulting in their share in the total credit by the scheduled commercial bank rising to 1.4% in March 2024 from 0.6% 5 years ago. Okay, with general rise in interest rates, the share of loans bearing over 9% of the interest rate has actually increased to 57.8% of total bank loans. Because of the rising interest rate, the interest rate are rising rapidly, and you can see even the repo rate is 6.5%. That means the interest rate must be higher than that only. So interest rate is currently around 9%, 10%, 11%. So the share of loans bearing over 9% interest rate increased to 57.8% of the total bank loans. Okay, so here from the credit data points, I will tell you that which data points are important. So this basic data point is important. Here you have to remember that in the household sector, individuals have the most of the credit that they are taking, and share of female borrowers. So this you can remember. This is not very important. You can just read it out. And then the private sector data points you can remember for the current year is most important. Okay, rapid growth has been seen in the small finance bank, so this is important, and this is not as much important. So this is the complete idea. Now when we talk about the scheduled commercial banks, they are including the regional rural banks. So in the annual BSR, in the basic statistical returns, when we say the scheduled commercial banks, it is including regional rural banks. So that has been specified by the Reserve Bank of India, that scheduled commercial bank, that is including the regional rural banks. Okay. So the basic statistical returns system was introduced in December 1972. It has been in force for more than 3.5 decades. The improvements in the system are effective from time to time. And now this was the previous data. It is nearly in effect for more than 50 years. Okay, so the improvement in the system has been done from time to time, but when it was introduced, so that is most important. The periodicity of the BSR survey will remain yearly. So this was told by the Reserve Bank of India. So you can understand that in the March 2024, the banks, see all the banks, the private sector banks, the public sector banks, including the regional rural banks, they get the BSR code. They get the code. Okay, they get the basic statistical return code. So each bank has a different code. Through that code, they are putting their details in the system, and these details are being collected by the Reserve Bank of India, and then this highlights, and then this analysis has been provided by the Reserve Bank of India. So the banks have to provide their details to the system, and then the RBI releases the complete annual report kind of thing, annual BSR, basic statistical returns. Okay, so BSR survey will remain yearly as hitherto, and reference date of BSR 1 and BSR 2. So BSR 1 is for the credit data, and the BSR 2 is for the deposit data. So that is also you have to remember. Will continue to be 31st March, so as to coincide with the accounting year of the banks. So this is the basic idea, that every 31st March they have to deposit their data, they have to put their data into the system, so that the Reserve Bank of India can release the annual data points. Okay, the Reserve Bank organized the BSR at the rate 50 conference on October 2022 because of the completion of the 50 years of the BSR system from 1972 to 2022. So that's why it was in news at that time, and this was the question that was actually asked in the examination. Okay, and you have to also remember the basic idea of the BSR and when it was introduced, and the important data points that have been provided in the returns, in the highlights of the Reserve Bank of India. So this is it. I hope you have understood. Any confusion, anyone? Okay, so as well as on Saturday, we will have the mega session on the annual report. So I will try to complete the annual report on Saturday, and I have been working on this report for past 2-3 days. So you can understand that like the report is quite lengthy, but there are the important data points that you have to directly see in the report, so that I will be providing you on Saturday. Okay. So now before going to the questions, I have to show you a very important thing, that if you go to edutap.co.in, here is the free material. In that you can go to the blogs. So the blogs have been prepared for you by the EduTap team, and we have, like, the team is working very hard to prepare these blogs for you for different information you can get through one area. So if you want to know about any of the examination, let's say RBI grade B, so you can go to the exam information, you can get the complete exam information. If you want to know about the strategy, you can know the complete strategy regarding the different components of the exam. If you want to know about the success stories, you can know the strategies that the toppers have adopted, that how they were able to achieve their dream, right? And if you want to know about the courses and such, so you can know about this. And at the end of the page, you also get to join the Telegram channel where you get the PDFs of the YouTube sessions. Okay, so okay, thank you so much, Pratil. And this is it. This is the idea, and these blogs are absolutely free. You are going to the website, you are seeing the blogs, and they are prepared very carefully for your understanding of the examination. Now, this is the first question. I hope you will be easily, So this is the first question. I hope you will be easily able to answer this question. Okay, more than the data points, here you have to focus on the key terms. Okay, the terms you have to understand. And this is the second question. I hope you will be able to answer this question also. So here in this first question, you have to tell the correct statement. In the second question, you have to tell the incorrect statement. I hope you will be able to answer this question very easily. And remember that when we talk about the basic statistical returns that are being released, the first one is for the credit data, the second one is for the deposit data, and they are released for the scheduled commercial banks, including the RRBs. But do not get confused in this question. Okay, so ma'am, can ARC be important for descriptive asset reconstruction companies? They can be, not ARC per se, but the question can be framed from the point of view of the NPAs, and in the finance section with the static ideas. They can be formed, but you can write the details about the ARC, the basic idea. You must know about the ARC, because the ONDC, the question has come from the ONDC directly, and you have to tell about the ONDC. So that was itself like a organization that we can say, a system that we can say. So ARC, yes, the question can come on ARC. I will not say no, because it is quite in news, but it will not only be on ARC, it will be related to the whole topic. So you will be easily able to write if a question comes on this, okay, if you have the basic understanding. So now, before ending the session and before giving you the announcement, there is a big announcement from EduTap that we have brought for you the guidebooks for RBI, NABARD and SEBI. So through a single guidebook, you are able to know much about the examination, the pattern of the examination, the syllabus of the examination. Even the previous year questions are also provided with this guidebook. And let me tell you that it is absolutely free of cost. You just have to download the guidebook. The link is given in the description box below. Okay, and this is absolutely free of cost to save your time. Now, as I've told you that I want all of you to be present on Saturday, because the analysis is nearly complete for the report. So I could have released the report today also, like I could have taken the session today also, because the analysis is nearly done from our side. But I want to take it on Saturday, because I know that many of you are working, and there are many people that are working. So the bank holiday is on Saturday. It is the second Saturday, right? So the bank holiday is there, and many people will get their holidays, so they will be able to join the session, as well as they will be able to ask the session. They will be able to ask the question. So you have to join live so that you are able to ask the question if any is coming in your mind, because there is the analysis part that is also going to be in the session. That's why I have brought, I have compiled the whole report. It is nearly of 50 to 60 slides, but I am going to cover the whole report in a very comprehensive manner, because I do not want to give you just 4 points that is not going to come in the examination. I have covered the report in a very thorough manner, so I want you all to join live also, so you can raise your queries at that time only, so that we can have some discussion also, okay, right? So on Saturday you are going to have the holiday, so join the session live. That's why I have kept it on Saturday, okay? And you're most welcome, Ritika. Thank you so much for joining the session. Thank you so much for joining the session, everyone. Yes, very good, Sarish. Thank you for reminding me. So on Saturday, you will have the session live. On Tuesday, we will have the revision session. So on Saturday, you will have the live session. So you can see that session also again on Sunday, on Monday, and on Tuesday, I will take your test. So on Tuesday, you will have the mega test for your annual report to see that how much you remember from the report. So there will be many questions that will be asked from the annual report on Tuesday. So on Saturday 10 a.m. on Saturday 10 a.m. we will have the live annual report, the complete annual report we will be discussing. On Tuesday 10 a.m. I will have your revision session. So you will have the comprehensive coverage through these, as well as you will get the document also, the PDF also, so you can revise through that also. Okay, so this is it from my side. And IBC, it is a static concept, so you can read it in statics, Shwetank. But I will see that if it is in news, I will bring the session. So you are most welcome, everyone. Thank